This is Investing Ideas by ValueInvestAsia.com.
Hi, Stanley here. Welcome to another episode of Investing Ideas. This week we are fortunate enough to have a chat with Mr. Phua King Kiet, an analyst from a family office based in Singapore. And King Kiet has been a value investor for a long time, and he basically like to look at company within the tech space, both in Singapore and also in the US market. This week he introduced to us a very small cap company based out of Singapore called Multi-Chem Limited. And this company has a very simple to understand business and yet trading at one of the lowest valuation I have ever come across in a company. So without further ado, let's get started.
From ValueInvestAsia.com, this is Investing Ideas, where we talk to investors from all walks of life, learn from them, and find out some of their favorite investment ideas.
Hello, welcome everyone to another episode of Investing Ideas. This week we have a very special guest who is King Kiet, a dear friend of mine. Hello, King Kiet.
Hi Sandy. How are you?
Very good. How are you?
Good.
Good. Okay. Why don't you give yourself some introduction on to our audience? Can you tell us, what do you do in your career?
Yep. I'm a buy-side analyst currently working for a family office. I've been there for about 5 years. I used to be a IT analyst, kind of like doing IT in the semiconductor industry.
Okay.
But then I have since helped to look at the technology portfolio of the family office. So in the job, I cover semiconductor stocks, technology stocks. So to utilize all my past working experience to look at fundamentally on those technology stocks.
Right. Yep. Wow. Okay. So you're the technology expert, but also, just on your own personal investment, how would you describe yourself as an investor? Because we know that value investing, there's a wide range of value investor. If I ask you how to describe your own strategy, how would you describe it?
Okay, I would think myself as someone that is try to learn a lot from different kind of discipline, but then I think we should not have any constraint on whether to invest, whether it's in a big cap or small cap or value or growth company or any job or companies that based on different geographical location. What I think is that investors have to be actively searching ideas around the world so that to improve the alpha of the portfolio. And then for myself, I really focus on the valuations. That means I use the free cash flow valuation to determine the intrinsic value of the company. I try to look at the underlying growth path of the company to incorporate the growth on the valuation. So because I think that growth is a part of the valuation to determine whether it's a value stock or not.
Yep. Fair enough. I think Buffett have said before, growth is a part of value. But when But on top of which market do you normally focus on? Say in your own portfolio, which market do you mainly focus on?
I mainly focus on the US stocks because we know that the US stocks is the largest market cap of the stock market around the world, and then especially for technology stocks, because they are leading in the technology, especially in artificial intelligence or even a software company. So there are a lot of potentials to be found in the US companies.
Right. Okay. Yeah. That's a very good introduction. But today you're not actually gonna share with us a US company. Interestingly, when you brought this company up, I'm quite surprised. Why don't you introduce this company to our audience? I think they'll be very fascinated by it.
Sure. This company is listed in Singapore. It's called Multi-Chem Limited. Okay. So it has a market cap of about 61 millions. So it's considered a very small caps. So what does this company do? This company is actually a IT security product distributor. So the business is very simple. So what they do is train the IT security professional to deploy IT security solutions provided by various vendors, and it has been quite long in the market. It's since 2002, and it has distributor points in 15 over countries.
Oh,
The
okay.
And the distributor that they have is usually they get the IT security software from, like, for example, Checkpoint, Cisco, Autopolo, Carbon Black, which are quite a prominent IT security company.
Right.
So,
Okay. Mm-hmm.
yep, it used to be doing the PCB drilling for this
Mm.
company, but since has divested its business.
Okay. So now it's fully a IT security distributor.
Yep, correct.
Okay, okay. And for this kind of distributorship, are they exclusive distributor or they're just one of many?
I think they are one of many, but as you know, because it takes time to build up the relationship with an IT distributor, compared to with the client as well as the vendors. So I do think that he has some kind of like a bit of a relationship built in for the to build in for the cost of the company.
Right.
Yep.
Okay. Okay. And why do it seems like an interesting a business, especially now internet security is getting more and more prominent and people are focusing on it. But why do you like this company?
Okay, so my investment thesis is quite simple. The company currently enjoy the tailwind from a secular growth in the IT security, because I think the business is quite counter-cyclical, because as no matter what happens in the economy, prevention of the IT security breach is the utmost important policy for the company to maintain. And the company has been generating a double-digit revenue growth for the past 6 years.
Wow.
As for the macro trend, the Q1 FY19, the worldwide IT security spending is still growing at about 12% year on year, and making it the fifth consecutive quarter of double-digit growth. And then,
Okay.
and then, what I think is that despite the company is a low mode company, but it earned the spread between the vendor and customer, meaning that the vendor will provide the software and the customer will buy from Multi-Chem as a kind of like as an IT security product. Then Multi-Chem will take a spread from it. But you have to think of it as a vendor will have to work with the distributor, so the company will use the product, and customers will need to have training to understand different configuration for on-premises cybersecurity. So I do think it takes time to build up the relationship.
Right. Okay. Okay. So okay, I have some question about how they actually do the business. Because if you say that they are the distributor of all these different solution or different products, but all these company they actually have presence in say Singapore as well, or in all the 15 countries that they operate, right? So it is possible for the end client to go directly to the main company instead of going
Hmm.
through them. Is that right?
It might not be that easy, because for example, you talk about Checkpoint.
Uh-huh.
Checkpoint is mainly focusing on developing the IT security solution, because IT security, you have hackers, like they are also improving their techniques to like try to hack into a different end-to-end endpoint.
Okay.
So they have to spend a lot of R&D effort on like trying to prevent those kind of like intrusion. But
Okay.
when you talk about distribution, it's just they will let the IT distributor, which is Multi-Chem case, to handle all the client relationship and training. So I don't think you really have to go through that to Checkpoint directly to buy the software on the company level.
Okay, okay. And another concern I might have, listening to you, is maybe in the world of we're going to cloud computing, and more of the server is becoming like almost hybrid server, or completely people might just host everything on AWS. Given that AWS they have their own integrated security within it, is there still a need to ask Multichem to put other security on it, or they can just go through AWS? How does
Yeah,
that work?
I think the proliferation of the public cloud has been still in a very early stage. Right now, I think not, like, for example, if you talk about Singapore government IT system, will they have put all the IT system into the AWS? So it may be, but I think it will be a very long term process that still will be another maybe 10 to 15 years of like kind of like the cycle to go through before you really put all into the public cloud. So I do think that like companies do have to employ the on-premises like database to host if there are like a lot of sensitive data that you worry that it might be you're not comfortable letting the public cloud vendor to handle it. So so I do think that there's still a need for the on-premises IT security. And then when you talk about the IT security manager or the IT or chief information officer, let's say if all the IT has been moved to public cloud, then what is the role of that chief information officer? They'll be like, maybe there's no job for him anymore. So they will have this kind of like incentive going on to like make sure that maybe the strategy is not to move to public cloud, but it's a mix of hybrid.
Right. Okay. Yeah. So I guess the sense from what you say is, it could be a threat. The cloud computing could be a threat, but generally, a lot of sensitive data, maybe company or the government would still prefer it to host it on their own premise, lah. Right?
Yes, correct.
Okay. Cool. Looking at that, given that you say that they have been growing, say double digit, for many years, past 6 years, but why have they remained such a small cap company? Why is that the case?
I guess it's because the owners and his wife actually owns about 80% of the company.
Oh.
So the top 3 shareholders actually held about 80% of the company, and the stock is quite illiquid. But maybe I just go through some of the highlight of the company. Like, for example, the revenue, as I mentioned, has been growing at like double digit, and then operating profit is actually even more impressive. It's actually at a double digit for the past 6 years. And then margin, of course, you look at margin. The margin I expect is to be very low, around 3 to 4%.
Oh, okay.
But the problem is that actually there's no much R&D being carried out for this company, because it's just mainly a distributor. So whatever you observe the top line, that means a double digit, the teens growth of the revenue will flow through the bottom line. So is it that let it have a double digit kind of like operating profit growth. And you talk about the on the net cash basis, right? Because MultiChem is currently sitting at a 44 million net cash. And if you compare the market cap of about 62 million, so this implies a EV to EBIT multiple of only 1.7 times, which is extremely low.
Okay.
Yeah.
Okay. Or if you look it in the other way, maybe a net cash of, if you minus off the net cash, the PE is roughly about 2 times.
Yes, correct. Yep, you're right. So I don't think you can find any other companies that trade at so low multiple in the Singapore market right now. Yeah.
Okay. But of course, I think for a lot of small cap company, especially you say that the main shareholder owns like 80% of the company. It goes back to the point of, how do you see the management? Are they fair to shareholders? Because they are a huge risk to minority shareholders, right?
Yep.
So how do you see the management?
So far I see the dividend payout, although it's about 30%, but it's still below the operating profit that it can generate. But nevertheless, the current dividend yield is still about 6%. And because they are the majority owners of the company, so they will like continue to distribute out this dividend back to the shareholders, which as a minority shareholders will tend to benefit from the dividend as well.
Right.
Yeah.
Okay.
So the reason why the EV EBIT is traded as such a low level is because the cash built up over the years. Because operating profit that the company is generating on a yearly basis is about 13 to 14 millions per year. That means it's actually earning on a EBIT of 30 million over the EBIT EV of about 44 million.
Wow.
Sorry,
Okay.
22 million.
Okay.
Which makes that it's actually it has an earning yield of 64% per year. So within 2 years, right? Basically, if you have 2 years, you buy the stock 2 years, you will get back all your stock price back already.
In theory.
In theory, yes.
But it almost sounds too good to be true, right? So if they are so cash flow rich, cash rich, and the business is almost anti-cyclical. Why is it listed in the first place? Why do you think they need to list the company in the first place?
I think previously they are doing the PCB drilling in China, but then because I think that this is a company, I mean this is a business with a lot of competition, so they kind of like divested the business, and the listing of the business is actually when they are still doing the PCB drilling business.
Right. Okay.
So since 2002, I think the owners have made an effort to switch to this IT security company. And of course, the company continued to be listed. But I actually I will not foresee that the company continue to be listed in the market, because eventually I was hoping eventually there will be a privatization going on. Because the owners might take some like loans from the banks and then try to privatize the company, because he already owns like 80% of the company. Yeah.
Okay. So to you, even privatization could be another out for investors lah.
Yes, correct.
I guess for yourself, invested in this company.
Yes.
Okay. So it seems that it's almost too good to be true company. Like everything looks good. But I have to ask you, what could be the risk? What could be the downside for such an investment?
I think the downside would be like the as what you have mentioned, because there's a public cloud trend that can handle end-to-end security, so people will move their IT applications to be hosted in the public cloud, which makes the on-premises IT security products obsolete. But I think, as I say, you will still have a long way to go, because we now is at a very early stage of a public cloud growth kind of like trajectory. Yeah. And then if I look at it, this company actually, because as a distributor, another distributor may come out to like kind of like grab the business off from Multi-Chem. So this might be a risk. But I see that because the company has been around for about almost 20 years already, so it does have some relationship with the vendors, relationship with the clients. So I do think that this kind of relationship is very hard to replicate, and it's also kind of like offset by the industry tailwind, because the industry tailwind is that the IT security spending is still growing strong at about double digit.
Right. Okay. But given you say that the company has a history of 20 years, but you mean that right at the beginning they are already doing this IT distributorship together with the PCB drilling?
Yes,
right?
correct.
I see. Okay. In the sense, I quite agree with you. Maybe the relationship that they have built up over the years, that could be quite sticky, as long as they don't screw up anything. But having said that, when they distribute the product, is it a recurring revenue, or is a one time revenue plus some training? How does that work?
I think it will be some recurring revenue, but I'm not so sure about what is because the contract detail might be quite sensitive to disclose. But I do think it's a recurring kind of business because if a new feature is being that IT security is always changing, because hacker might have developed a new way of hacking. So the IT security company do have to spend a lot of R&D on researching on what is the best way to protect the IT security. Therefore, I do think there's a pricing mechanism being priced in to actually renew the contract such that you continue to get the protection. But so MultiChem will continue to be the IT security distributor that continue to distribute the products.
Okay. Yeah, I guess that's fair. Now, talking about valuation, if for such a company, of course, you're talking about their EV over EBITDA at 1.7 times, or a PE of 2 times net cash. Seems unreasonable, seems undervalued. In your opinion, what should be a fair value for such a company?
I think because since it's a small cap company, so if let's say you incorporate a small cap illiquidity premium inside, and then you actually demand for a double digit, like say 12% yield per year, so you have to multiply the EV to EP multiple by by 8 times because you just invert the 12%. Then you get an 8 times multiple.
Okay.
The valuation, you will still come close to like $1.60, which is a 125% return compared to the current price of like 73 cents now.
Right. Okay.
But yeah.
Wow.
So it this means that I think this company is like really undervalued because based on the revenue growth and then operating income growth, but it's still trading at a like below price to book value of 0.6 times. So it's actually a kind of like neglected small cap in Singapore.
Okay.
Yeah.
It seems that it is undervalued, but okay, let me be the devil's advocate here, because a lot of small cap companies we see, right, they seem cheap, but due to the illiquidity and due to the huge stake of their major shareholder, it is almost very hard for them to get out of and become fairly valued. And you know what could be the catalyst for such a company apart from, you say, privatization, right? If that doesn't pan out, you know, what other catalysts are you looking at?
Because this refers to the kind of like portfolio allocation of the stocks. Because for my side, because I do have some like CPF, like stock investment to invest, and then while CPF will give you like about 3%. So if I have a CPF fund, then if I invest in this company, I'm getting about 6% dividend yield. And at the same time, I'm waiting for the privatization to happen. So it's like call options for me to have it inside for my CPF stocks. So I do think that it's like kind of like I just put a small allocation inside because, as you're correct to say that, because the stock is very illiquid, then it's not warrant to have a very big position inside because you might not be able to get out. So if you just put in a small portion of like your CPF inside, I think it's quite okay to do that.
Okay.
So it depends on what is your cash allocation versus whether you want to use your CPF to invest.
I see.
Yeah.
That's very smart. So in a way, I guess what you're saying is due to it's already so low valuation and quite a simple to understand business. You feel that the downside risk is not too much, as long as the company maintain the business, right? They don't even have to grow, right? They just at least maintain the business. You should still be continuing enjoying that 6% dividend. And,
yes, correct.
Just having, if it privatized, then it's good. If not, you just enjoy the 6%.
Yes, correct.
Oh, that's okay. Interesting. I quite agree with you. This one seems like a very, 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 very undervalued stock. And definitely, I have yet to study deeply into it, but you definitely have piqued my interest. So once again, this is Ken Kiet, a great investor and a personal friend of mine who has been an analyst for a family office, and I look up to him in many of his theses, and I always learn a lot from him. So thank you so much again.
Thank you, Stanley.
Thank you. I hope to see you again soon. Bye.
Okay, bye.
Thank you for listening. You can subscribe to our show on Apple Podcast, Google Podcast, Spotify, or wherever you get your podcast. If you are feeling generous, please give us a rating and review as well. This would greatly help other investors find out about our podcast. To access our show notes, please go to valueinvestasia.com/investing ideas and be sure to sign up for our email newsletter for more outstanding content and reports about investing. The show is for entertainment purposes only and should not be taken as investment advice. Please seek professional advice or do your own research when making any investment decision.